Brent Thill, Jefferies tech research analyst, joins us now. Brent, that seems to be the question of the morning as everyone is assessing the prospects for the second half. What's your take?
I think tech can continue its rally. We've had a massive underperformance in software, so we do believe that software can pick up the pace. Semis and infrastructure have been leading the charge. So we look for a more weighted software rally in the back half of this year. It's massively underperformed. Semis up close to 50, software up 7. So we do believe year to date, we believe that software can have a better rally as we go into the seasonally stronger second half, as well as we look at 25 numbers. So it's been a challenging front half for our core coverage, but we think that that will change in the back half. We do think it's super early in AI, and so we think we're in really early innings. We're in what we call an AI picks and shovels. We're buying the core infrastructure to get these data centers up. The software really is not there yet. 95% of AI deployments are what we call POCs, or proof of concepts. Those have to flip to live installations and get the full value. And as that happens, we think companies like Microsoft are in great shape with their Copilot strategy in the back half. Amazon will also benefit in a big way in the back half. Others like Snowflake, Elastic, who are riding this AI wave as well, will benefit as we go into what again is largely fueled by infrastructure, and then as we call it, the applications or the software, which is the art that's going to get hung inside the house. We're building the frames of the house right now. We don't have any of the artwork. That will happen late 24 into 2025.
I see here that you have this CIO survey that says 57% of CIOs are reallocating spend due to AI. It's clear that that kind of shift in resources has been funneled in that direction, but I'm curious, who do you see them reallocating from? In other words, there are software plays that have been left behind in the first half of the year for a reason, and those that you expect to continue to kind of try and generate additional spending from enterprises in particular as a result of this shift.
Yeah, as you said, 60% of these CIOs are reallocating spend, and I think they're reallocating away from horizontal applications. So we've seen the number of back office HR and front office CRM companies like Salesforce and like Workday have some impact in the front half of the year. Others have not seen any impact. And so we think right now horizontal applications that are seat-based models have been somewhat impacted, and that won't last forever. But I think we're going through a phase of every board is effectively asking the management teams, what are we doing in AI? And AI is not cheap. It takes time, energy, resources, and they're having to reallocate that budget. And so those applications will come back at some point, but they're not infused with AI yet, and they're not having a demonstrable difference for the users. And so in the interim, these horizontal apps get put on the back burner. Data initiatives like what's happening with Snowflake, when you look at what's happening with Microsoft Azure, Amazon, AWS, those are front burner. Data estates are seeing incredible budget surges because every company's trying to get their data ready for AI. So you're not going to deploy new applications on top of data that's not ready. So we think, again, the survey said horizontal applications, as I mentioned, are going to be the ones that kind of get in the short term, get the back burner, but it'll rotate back to those apps over a period of time.